The overall index rose for the 28th straight month, and that's a good signal. It rose above growth neutral. It was at 58.2 from February's 57.9. This is a chart of the last 18 months of the U.S. number compared to the regional number, the Mid-American number, and as the viewer can see, that regional number is up to its highest level since August of last year. Now the national number comes out later on this morning, and I expect it to be down for the month. Our survey was done before the impacts of the recent floods were fully realized. I expect those numbers to decline in the weeks and months ahead, but I'm still expecting an expanding regional economy. We're still seeing pretty good growth in hiring in the region. Now, when you look at it compared to the nation, not as strong. If we take the growth in hiring over the last year, the U.S. 1.7%. That's pretty good. That's in a good range. The region's only at 0.5%, so well off the national numbers. So that's some concern out there. We're not seeing the hiring. A lot of that we can identify as finding and hiring qualified workers. That still remains the number one concern among the survey participants. What the market is telling us is inflation remains well contained. The Federal Reserve told us no rate hikes for the rest of the year unless things change, of course, dramatically. So that, in terms of borrowers out there, it's still looking very good to borrow, and banks are lending, of course, and that's a good signal. The big risk, of course, in this part of the country is just the overall impacts of the floods. Now, almost a quarter of our survey participants said there were negative impacts. They already experienced negative impacts from flood. Outside the immediate region, that's mostly in Nebraska, Iowa, Missouri, and some in South Dakota. But when you look at the entire region, the biggest risk is the global economy and the trade restrictions, the trade barriers, the agreement, hopefully an agreement with China. That continues to be a real sore spot. So two things. The global economy is weakening. That's a threat to agriculture. It's a threat to this part of the country, but also the trade agreements and tariffs. And we saw, and one of the reasons that our index has been up has been exports. Now that seems odd given the tariff situation, but a lot of businesses out there are exporting now in anticipation of higher tariffs. They're importing now in anticipation of higher tariffs as well. So those factors we saw in our March survey. The Bureau of Labor Statistics employment number, which comes out this Friday, that would be April the 5th, that jobs number for February was not good. We hope March is above 100,000, hopefully in the 150,000 range. Anything below 50,000, real concern. Brexit, of course, the agreement, where Great Britain is leaving the EU. If that's a rough exit, that will be telegraphed to this part of the country in terms of slower growth. And of course, housing. It's an underreported issue. The housing prices are now growing at a much slower rate. Housing sales are not where they need to be. We're seeing the new housing and even already occupied housing sales are not, the growth is just not there, and we're seeing pullbacks there. Big issue, and that's what we're seeing going forward. But all in all, when you look at it for our economy, the report was a good report for the month of March, particularly good given what the backdrop of the trade agreements or disagreements and also the floods. I expect the numbers to be down a bit April because of the flooding. Now we're going to see some of the economic activity will be built up in the short and intermediate term to remedy some of the flood impacts, and that it will seemingly be a positive, but it's not the way you want to grow your economy, and that we will see that going forward. And it's going to end, and that plus the tariffs are going to end up with some higher prices, particularly on the food. That would be, of course, pork and poultry and livestock going forward, and grains as well. There'll be some upward movement because of the floods, but not as much as the farmers would like to see.